What's up, guys? Welcome back to another YouTube video. As you can see, the title of this video is why ETFs are the best way to get into investing. So I know a lot of us, we hear the word investing, we don't know what it is. There's different type of investing. There's investing into the stock market, there's doing real estate, there's doing crypto, there's investing and going out and starting a business. That's a type of investment. But the investing that we're going to talk about today is similar to stocks and ETFs. They're not the same thing, but they're in the same kind of area, you can say, right? Individual stocks, I'm pretty sure if some of you guys know, there's companies out there that they offer people to give them money, IPOs, right? Initial public offering, and in exchange you get part ownership of that company. So you ever hear people say they have Apple shares, or they have Nvidia shares, they have Google shares, they own some Nike, right? That just means they're shareholders, and you own a small percentage of that company. A lot of us don't understand that, like, we want to own part of these companies because you buy Apple, you buy Nike, you go to Walmart, so you want to buy a Walmart stock, right? Because you know it's going to continuously grow over time. That's what stocks are. Those are individual stocks. But what we're going to be talking about today is ETFs. What are ETFs? So we're going to keep it simple. ETFs are exchange traded funds. All that really means is, instead of investing into one company, like I just told you, instead of just investing into Apple, instead of just investing into Google, instead of just investing into AMD or Amazon, you're investing in a group of companies all at once. So I know you're thinking about that, and you're like, how is that possible? How is it that you can invest inside of one fund and it holds all these companies? Well, I'm going to keep it simple for you. When you put money into an Apple, into a Tesla, you're just putting it into one stock. So instead of just putting money into an Apple or a Tesla, an ETF allows you to own small pieces of multiple companies, of hundreds of different types of companies, depending on which fund you choose. So, for example, let's say an ETF like the S&P 500, right? The ticker symbol for the company Vanguard that owns that ETF is VOO. So this Vanguard ETF tracks that index, and every time you invest into VOO, you're investing into 500 different companies that are part of this fund, that are part of this index. So just think about that. You get exposure to different sectors, you get exposure to the whole market. It's not really like, okay, now I'm fully into Apple, now I'm fully into Tesla, but you're getting a piece of each. You have to understand why ETFs are good for beginners. This is where they stand out. It's because you can diversify. Diversification. What do you think diversification is, right? There's diversification, and then there is wholeheartedly just going into one stock, like we've just been saying the whole time. Just going into Apple, buying a lot of shares of Apple, which you can do. You can do whatever you want, but I'm going to tell you why ETFs are the safest bet for you, right? Because when you have an ETF or you own an ETF, you're diversified. So you're able to put your money in multiple different companies that are consistently doing good. If one of your companies does bad, it doesn't destroy your whole position. It doesn't destroy your investment. So you have to understand that because your money is spread out, and because it's spread out through different companies, you're actually allowing yourself to be more diversified, and you can actually create a portfolio simply off of index funds, simply off of ETFs. Second, you're able to lower your risks compared to just picking individual stocks. When you pick one stock, you're betting on just that one company. So if that one company does bad, or let's say you're not a person who understands financial You don't understand how to read a financial chart, or you don't understand how to read a balance sheet of a company. You don't understand how to read a cash flow statement of a company. You don't understand how to read a P&L of a company, because those are the type of things that if you're doing, you would probably be going into individual stocks. Like people who are picking individual stocks, those are what you should be doing. You should understand the moat of the company. You should understand who the CEOs of the company are. You should understand who's on the board. You should understand the vision of that company. Don't just choose a single stock just because you heard about it on the internet, or because you heard Nvidia and AI are making people a lot of money. Now you're investing into it. I know that's how a lot of investors think, but if you're gonna go into Nvidia, know why you're gonna go into it. If you're gonna go into AMD, know why you're gonna go into it. If you're gonna pick Microsoft, know why you're picking Microsoft. Are you picking it for the long term? Are you picking it for the next 2, 3, 4, 5 years? Why are you picking that company? So those are the things you have to understand. Do you understand fundamental analysis? Can you read a balance sheet of a company? If you don't know how to do any of those things, then why are you picking an individual stock? This is the best. ETFs is the best way for beginning investors to go, just to get a little bit of a better understanding about how the stock market works. Your money becomes diversified because it's going to multiple different companies, and now you don't have to bet your whole portfolio on 3 single stocks or 4 single stocks, and now you can use that money and allocate it towards many different companies. With ETFs, you're betting on the overall market, which has an historically great returns. Especially if you really look at it and do your research, you'll see that over the last, you could say 50 years, the stock market has generally gone up, and it's grown over time. So you want to be able to be an investor who's here for the long term and doesn't get shaken out because you own 4 or 5. I've heard people even have 10 stocks or 20 stocks that they're holding, but you don't even know what you're doing. Now you're too, it's called being spread apart. Now you have so much money tied up in these small different companies. You don't have an ETF portfolio. You don't have ETFs as part of your portfolio, and you simply only have just single stocks. And now, let's say a downturn in the market happens, all your stocks are going down. Now you have no ETFs there to pretty much balance out your portfolio, which is what is happening right now. The market is kind of down because of everything that's going on, and you don't have nothing to balance out your portfolio. So you have to understand that simplicity is the best way for you to get into the market as a beginner. You don't want to be too risk on because now you're just starting and you're a beginner. So you don't really understand yet what you're doing. You shouldn't be trying to guess when a stock is going up. If you're trying to guess when a stock is going to go up, or you don't understand why a stock is going up, you don't understand why it's going down, you don't understand why there's day-to-day fluctuations in the market, then you should not be investing into single stocks. Learn that before you get into any single stocks. But ETFs are the best way to go because these are a basket of companies. These are your apples. Your apples are inside of this. Your Teslas, your Amazons, your Microsofts are in this ETF, and you're able to invest into those companies. So here's how to start investing in ETFs. I would tell you it's pretty simple. All you have to do is open a brokerage account. I know most of you are familiar with Robinhood. If you don't know what a brokerage account is, a brokerage account is just an app that you can download where you can start investing. You yourself can start investing. You open a taxable brokerage account, and these companies are kind of like a broker between the stock market and you, the customer. And now you can buy through this brokerage. You can buy into the stock market. So there's your Robinhoods, there's your Vanguards, there's your Fidelities, there's your Charles Schwab, there's M1 Finance. So choose whichever one you want. Whichever, like me, I like Robinhood's user interface. Fidelity's a little bit more complex, but I also use it as well for more long term. So whichever one or whichever platform that you use, make sure you like it. But the most important thing I think is just opening a brokerage account, a personal brokerage account. And then step 2 is choosing a basic ETF. You can do your own research. I'm not a financial advisor. I'm not here to give you advice on what to choose, what stock to go into, what ETF to choose. But a few that I would suggest or that I will tell you about is that a lot of people start with VOO or they start with the SPY. Those both are ETFs that cover the index of the top 500 companies in the US. So VOO and SPY, they cover the top 500 companies in the US. So you can consistently be investing into those over time, and you'll see that you're not guaranteed returns, because I don't want to promise anybody that you're guaranteed returns. But once you start to actually understand investing, and once you start understanding how the market reacts and what it does in the long run and not in the short term, not 1-2 years, but in the long run, like the next 5 years, you'll see that, damn, the stock market generally goes up. The S&P 500 generally goes up every 3-6 years. It's going up. It's gradually going up. You might not see it in the day-to-day fluctuations or even the week-to-week fluctuations, but in the long run, it grows. So if you have $50, $100, if you even have $20 that you could spare every week or every month, I just want you to start. It's nothing. It's not hard. You just need to start. That's the most important thing. Just starting. Because I think that's what's wrong with a lot of people, is that we don't understand how investing works. We don't understand it, because we think that you have to be a businessman to be investing. You have to have a suit on to be investing. You have to have money to start investing. But in reality, now it's as simple as ever. You just download a brokerage app. It's literally on your app store. Robinhood, Fidelity, Vanguard, whichever one that you like, the user interface is good and you like the app, you can go and download it, and then you can start investing like that. So those are the reasons why I would start with ETFs if I was just a beginner. I started with ETFs, right? And I got more into single stocks because I started to understand a little bit more. But even me, I'm still a little cautious, because the more you think you know, the less you actually know. So I thought I knew a lot. You're making money. Then the market, something happens, and then it starts playing with your psychic, and then you sell, and then you lose money because you don't understand why you actually bought that stock in the first place, and that you're just in a downturn. The market's in a downturn right now, and you should probably hold for the next few years, right? It's easier said than done, but with the knowledge that I have now, I always understand that I'm playing a long game. It's like playing a basketball game. The game is long. It's not won in the first quarter. It's not won in the second quarter. It's not won in the third quarter. It's not won even in the first few minutes of the fourth quarter. You've seen teams that were up 15-20 in like the last 6 minutes, and then a team comes back on them and beats them. So stuff like that happen. The stock market, think about it like a basketball game. Think about it like a football game. It's a long game. The game's never over. So you have to continuously be improving, continuously be trying to get better, and understand that it's a long-term run. It's not a short-term. Stop trying to make quick flips to make 500 in a day. That's unrealistic. As realistic as they say that it is, it's unrealistic, right? Your day traders that probably tell you they make a lot of money, they don't show you how much they actually lose. I'm not doubting that they're making money. That's not what I'm saying. But they don't show you the losses. Thank you for watching, and I hope you guys actually start and take my advice and download a Robinhood or Vanguard or Fidelity, whichever app that you like and you like the user interface. You can go and download and start investing today. Peace.